Thank you so much for joining into another episode of Business Owner Series and your favorite program, The Money Minutes. We're going to have Aman talk about numbers. Last week, we had such a great response from viewers that told us, you know what, why are you looking at $60,000 salary, Seema? Why are you looking at $80,000? Health professional and business owners, their need is at least $15,000 a month. And I completely agree. So this episode, we're just going to talk about someone who needs about $15,000 net every month in their bank account, personal bank account, to run their family, to run their budget. We're going to also talk about how best we can set up the withdrawal from the corporation when it comes to 180,000. Really, the owner has to take out about $300,000 from the business to have net $180,000. So without further ado, I would like to welcome Aman with his numbers and slides. Thank you once again, Aman. Thank you so much for joining our program. We've had great discussions the last few weeks in regards to business owners and health professionals and their corporation strategies. We want to make sure that the corporation does everything possible to minimize taxes and maximize profits. That's the ultimate purpose. And Aman, I appreciate you coming up with numbers and discussing those numbers. And one thing I also admire about our viewers is that, you know, they're taking part, they're sending questions, they're sending suggestions. And one of the suggestions that came from last video was, can you talk to us more about the real life numbers? You know, a health professional corporation earns anywhere from $500,000 to $650,000. They take out anywhere from $150,000 to $300,000 as income. They have this much retained earning. Can you talk about that? So I'm very grateful, and that's what we're going to focus on today. Aman, is there anything else you want to add before we get into sharing our screen?
Seema, I think I look forward to these meetings because it allows me to get into back my formal shirts again. So I look forward to these for many different reasons, one of them being a reason to dress up.
That's right. And I hope we're bringing some value to our clients and our viewers, because our viewers are very important. They are the ones, when they ask us right questions and we bring the right answer to them, it's just such a good feeling, isn't it?
Absolutely. Yeah, see, I do want to say this, like, I don't think this should be interpreted as a tax advice. We're not accountants. That's not, what our job is. But what we, at least in my mind, our attempt is to simplify the situation to a point where it's in hypothetical that a person, a professional or a business owner has just a single source of income and it's coming a particular way. And might not be realistic, but it's the simplicity that tries to bring out the message. The tax dollars might not be down to the right penny, but they are in the ballparks, and that's what we're trying to do here.
That's right. I love that disclaimer. Thank you so much for bringing that up. None of us are tax consultants, and you need your CPA, you need your accountants to give you right advice, exact numbers as to what the taxation is going to be. But we're trying to simplify things so that you have your accountant meeting once a year for 1 hour. But by watching these small messages, short messages, you're able to conceive that 1 hour meeting by asking right questions. So without further ado, I'm going to start sharing my screen.
So, like, as we've discussed before, we talked about taking compensation as dividends. We've talked about taking compensation as salary. The question is that it, or is there a middle ground? And I think that's what we want to touch upon, that there's no right or wrong answer. You have to see what works best in your situation.
Right. And I think we came to a conclusion that whether, for a small number like $60,000 or $80,000, regardless if you're withdrawing money as dividends or salary, it makes really no difference. but by drawing a salary, you look better to your lenders, because I'm assuming that's when you're just starting out. You want to make sure that lenders are happy and they give you that helping hand with that line of credit, with that mortgage or the initial commercial mortgage. So for that reason, I think you would want to go with salary. But like I said, our viewers are asking, let's go and take a real life example. And that's what I think you have tried to attempt here. A $650,000 revenue coming into a health professional corporation. And should we draw dividend or salary or a combination of two? And thank you for putting these numbers together. Let's get right into it. Aman, over to you.
Yeah. So Seema, like, I think I'd like to position it as it could be either or a mix of the two. There's no right or wrong answer. As always, you said there is benefits and some drawbacks to just being on the extremes. So the middle path is I think the optimum way to go about it, but the difference, is all the choice could always be an individual. So in terms of what you see here, three columns. First is to the most right is if an individual is just taking dividends.
Dividends only, yep.
Dividends only. Then towards the left is where it's a combination of salary and dividends. And then the third from the left is when it's only salary.
That's right.
So going back to where you said, like, okay, this is probably a reasonable expectation that, professional corporation is earning about 650K. It has expenses of 100,000 from either staff or office. And then it decides the professional decides to compensate themselves through dividends only. In that case, they'll have a net income after taxes of about 480K, 478. And then they'll take a dividend of about 300,000, which transitions to their personal income.
And Aman, that's reasonable, right? For a health professional to aim for a $300,000 withdrawal to earn a net salary of 175, 180.
Yeah. And I think the way we've used it is like, if it's about 15,000 15,000 monthly expenses, your annual expense for your lifestyle is about 180K.
Correct.
So that's how we're using it. And I think it is reflective of some of the clients that I work with. It could be higher, it could be lower, but that's probably the ballpark that you can work with.
Perfect. So on the dividend side, Aman, I see 177,000, 177,500 as the total tax paid on dividend.
Right. And so before we move on to the other column, like, I just want to summarize this. But if you do one more click, that 177 is both a sum of what's paid by the corporation, the 71K, and the 106K that was paid on the personal side.
Right. And it's very important for everyone to know that corporation, my cousin, my preferential treated cousin by CRA, gets a discount. The corporation cousin only pays 13 or 12%. And I pay my MTR could be as high as 52% in Ontario.
Right. Yeah. So that's the combination of the taxes that's paid in this case. Again, these are approximations. Exact numbers could vary based on any other income, but this is just a very simpler scenario which approximates the tax bill. So with that, if we move on to the other side, we swing the pendulum to the left. In this scenario, the expenses are still the same, 100K, but the professional in this case takes out a salary of 300K. So which means that the tax bill of the corporation drops down a bit, quite a bit actually. And what's left in the corporation is also less. And the professional takes no dividends out. There's no dividends. So the net income in the corporation is the same as before. Now the personal income is taxed, and the total taxes paid between me and my cousin is 161.
161.
Right. So again, there are differences. And one more click, please. That's the net income within the corporation. So
That's
you see
right.
the taxes paid are less in this case, and the corporation and the income within the corporation is a bit higher than what it was just the dividends only.
Mm-hmm. I noticed that because dividends are paid out with after-tax dollars, right?
Absolutely, yes. So that's the after-tax dollars. And this is the middle scenario. If we did, okay, 150 in salary and 150 in dividends, if we run through the numbers, I'll be, you kind of left again in the middle of the two columns on the left and the right. So your net income in this case is about 183K, a little bit more than what you were looking at. The taxes paid are again a little bit middle between the either side. And
Mm-hmm.
lastly, what's the net income left within the corporation is again a middle between the two scenarios that we talked about.
That's right. So these numbers basically, they look different, but really there is no difference. You're taking salary out, you're taking dividend out. What you're leaving in the corporation could differ a little bit. What you're paying into CPP could differ a little bit. But at the end of the day, the main ultimate decision is based on, do I want to have RRSP contributions? Do I want to look good with my lenders? Right? If you said yes to those two questions, then you are better off going with the middle scenario as opposed to either right or the left.
Yeah. So Seema, I have a question for you now.
Mhm.
So in either scenario, it doesn't matter which scenario you're looking at, we see that there is income accumulating within the corporation.
Yes,
So in the first case, it was 250, and the last, a little bit less. But I mean, if they let this sit in the corporate bank account, it's going to earn next to nothing. So do you have any ideas that you would want to share as to what could be a better use of this money?
absolutely. So that's where we come in as financial advisors. There is specialty of CPAs to advise you on taxes, and as financial planners, we have to make sure that your savings, whether your saving is sitting in your personal account or corporation account, we have to put that saving to work and work in such a way so you minimize taxes and you maximize profits, you maximize growth. That is the ultimate goal of you having to work with a financial planner. So Aman, that's a great question. Sometimes it could be such a small thing as starting a health spending account for a health professional. What we're trying to do is whatever retained earning we've left in the corporation, how do we minimize tax and get that out to health professional or business owner into a personal account?
Right.
So health spending account is one strategy that works all the time. Individual pension plan, they are another one. If you don't want to do your RRSPs from your personal income and you want to have a pension plan right from your corporation, that's number two. You can go into corporate owned life insurance policies, CIRP we call it. This is basically an insured retirement plan for business owner or health professional. You're saving money that is sitting in the corporation, and when you're ready to draw, you take that same money, and we will show you, maybe this is a topic that we have to cover in our next episode, where we talk about how best can we take the retained earnings, because if every year you're leaving $250,000 in your corporation, pretty soon it's going to reach that level of 1,800,000-900,000. And then, there's a discussion about passive income and all that good stuff. So let's take one step at a time. And like you mentioned, we want to simplify these messages, right, as much as possible. So by now, we are very happy with what we have talked about in the sense, should I take out dividends or salary, right? I have now retained earnings. Now I've been practicing for 5-6 years. So what do I do with my retained earnings, Okay.
Right.
So these are some of the topics we're going to talk about. And next one, I would tell you, corporate owned life insurance, or we call it CIRP, a corporate insured retirement plan. We will be dealing with that next week. And thank you so much for sharing your knowledge and your expertise here today. And I want to thank once again to all the viewers that are taking part, sending emails, sending messages, commenting. Thank you so much for doing that. Aman, over to you.
Yeah, I think Seema, you've stolen my thunder. I do want to thank everybody who puts in the time to listen and then kindly send their feedback, which is so appreciated. And thank you for putting this together and working on joint messages. I think it's a win-win, and I really am looking forward to your thoughts and your views on how to take this money out, which is sitting in the corporation in a most tax effective manner, and look forward to the CIRP session, as you mentioned. Thank you so
Absolutely.
much.
I do as well. Enjoy.